So for most people out there, buying a house is going to be the most expensive thing you ever buy. Whenever you buy something that costs, for example, $100,000, if you save just 2%, that is $2,000, okay? So when you're talking about, hey, I'm gonna buy this thing that takes me 30 years to pay off, and the money I borrow from the bank, I'm gonna pay it to them like almost twice, that's pretty crazy. That's pretty insane. So for this video, my goal is simple, okay? I want to save you as much money as possible on interest, and I also want to save you as much time as possible by paying off your mortgage faster, okay? Early, without it actually hurting as much as you may think is going to hurt, okay? So as you watch this video, keep along and you'll actually know exactly how to do it. I'll give you two methods, but for the most part, number one and number two, I would probably combine them both to save you the most money. And by the way, when I bought my first home, I actually paid cash for it, okay? I made a lot of mistakes in that deal, but most people can't do that, okay? So the goal is, if I do buy a home and I'm gonna borrow money to do it, how do I save as much money so when I buy it, I don't end up basically paying the bank twice, okay? It's pretty crazy. So as always, guys, like this video and top out, also subscribe and hit the bell so you get notified. Now, the first thing I want to tell you is this, okay? When you're buying a home, the buy is the most important part. So if you want to save money, the goal is not to say, hey, how do I save money on this $500,000 home that I bought that I cannot afford? The goal is to say, hey, how do I buy a home that's actually affordable? Because that's the most important part, okay? A bank might pre-qualify you for a home that costs like $500,000, but your budget might only be for like $300K, but the bank will lend you the money. So the goal is to know exactly what your real budget is and don't pay attention to the bank. So the buy is the most important part. So here's what you want to do, okay? When it comes to buying a home, I look for a few things. I look to buy a home where the cost of owning the home, between the mortgage, capital interest payments, basically the taxes, the insurance, and the maintenance, it's not going to be more than 33% of my net monthly income. So that's the goal. And on top of that, I want to make sure I can actually pay off this home in 15 years. More on that later, but that's the whole thing. If this home is not more than a third of my monthly income, I have more money left over to basically play around and to try to pay it off faster. But I know people, okay? People that basically buy a home and they break the bank and they basically go paycheck to paycheck every single month, but don't realize it's going to be paycheck to paycheck for like 30 years, 3 decades. That's not what you want. So making sure you actually buy an affordable home is the most important part. Now, the first thing you want to do when it comes to saving money on interest is going to be a simple one, okay? Instead of actually getting, for example, a 30-year mortgage, you actually want to get instead a 15-year mortgage. Now, I want to show you guys this right here because I'm more of a visual learner, but the idea is, let's say, for example, you actually wanted to buy a home. And let's say this home is actually selling for around $300,000, okay? On top of that, you're gonna put down 20%, which by the way is a lot of money. You actually got a 30-year mortgage and you're paying 6% in interest, okay? Your monthly payments are looking to be like around $1,702. Now, by the way, this calculator is by bank rate. You can actually go to bank rate, mortgage calculator, and find this one and run your numbers before you try to buy a house. Now, the most important part is not this number right here. What you actually want to see is right here where it says amortization. Now, an amortization schedule, it shows basically your entire payments for the entire loan. Is how much you're going to end up paying for the loan, okay? So in total, you borrowed $240,000 because you put down $60,000, obviously. Now, you are gonna pay an interest around $278,000 just at 6%, okay? That is basically a lot of money. So the home you bought was like $300K, but your total cost is around $500,000. And on top of that, you'll be done in about 30 years. Now, here's the crazy thing. Number one is, okay, whenever you're looking to buy a home, it's super important you shop around for a mortgage. Why? Because look at this, okay, guys? Just by having a 6% interest, it costs you $278,000. But let's say you actually went out there and got a mortgage for like 5%. You shopped around and found something cheaper, okay? How much would that save you? The answer is a ton of money. You went from 278 to 223 just by a 1% difference. So the answer is, my mom loves her bank, but you don't want to have any loyalty when you're shopping around for a loan, okay? You want to make sure you get the lowest rate possible with the best terms possible that saves you the most money. 1% difference can be the difference from basically $40,000 in your pocket and $40,000 in the bank's pocket. So you want to look out for yourself. Now, here's the idea. That's just shopping around. But what would happen if instead of getting basically a 30-year mortgage, you actually shop around and got yourself a 15-year mortgage? The answer is you would save a lot of money. Here's how much exactly, okay? So I'm going to go ahead and switch it from 30-year to 15-year. And you go from basically 278 to just around 101,000 at 5%. But obviously, we're looking at 6%, okay? So at 6% is 124. Instead of paying 278 in interest, you're paying 124 in interest. By the way, whenever you hear me saying these numbers, people tend to check out and be like, yeah, 278, a lot of money. But you never really picture how much $278,000 actually is, okay? Like, for example, if you're making, let's say, $4,000 every single month, if that's your income, if you're paying $278,000 in extra income basically to the bank, divide that by $4,000, that's basically like 69 months, or divided by 12, that's basically like almost 6 years that you're paying the bank of your hard-earned money, okay? So it's a lot, all right? So don't just see the number and be like, okay, it's a lot of money, I save a lot. No, it's a big deal because it is definitely a lot of cash. Now, what is the pro and what is the con here? The pro is obviously you get to save a ton of money in interest. Now, another pro is basically you finish the mortgage 15 years early. But what exactly is the con, and why don't most people get a 15-year mortgage instead of getting a 30-year mortgage, okay? The answer is, well, if you go over here to your payment breakdown, look at this, right? For a 15-year mortgage, you're paying about $2,025 in principal and interest. I don't include everything else because this stuff is subjective depending on the state you actually live and basically the land tax there. But for the most part, look at this, right? $2,025 for a 15-year mortgage, while, for example, for a 30-year mortgage, you only pay around $1,500 almost, okay? Less than that. But the idea is that for people that actually want to buy a bigger house with more stuff that's more expensive, they want to get a 30-year because that's the only way they can actually afford it in the bank size. But when you actually look at a 15-year mortgage, it actually forces you to buy a cheaper home you can afford to make the payments on and finish paying off a lot faster. Remember, the average person moves out like I think every 5 years or so. So yes, we might buy with the mindset of I want to be able to afford this home, pay it off early, be done with it, right? But you might move around, okay? So don't go into a home thinking I gotta have this home that's so big and massive because it's gonna be my only home ever. Most likely it's not going to be. And anything with the home, if you save a lot of money, right, you could always just fix some things up and remodel here and there and save a ton of cash and interest, and also just the overall cost of the mortgage, okay? Now, number 2, guys, okay? Here's one extra thing you could actually do. Now, let's say, for example, for the sake of simplicity, same house, same mortgage, same interest rate, same down payment, same everything, okay? Now, what can you do to save a lot of money on this whole mortgage? Now, let's say you don't want to get a 15-year mortgage, you want to stick to a 30-year mortgage. That's fine, right? But what can you do to save a lot of money? The answer is you can make one extra mortgage payment every single year. So on average, you're making about 52 well, not 52, that's weekly, okay? You're making 12 mortgage payments every single year. Now, instead of making 12 mortgage payments every single year, you actually make 13 mortgage payments every single year. Just one. What would be the difference, okay? The answer is the difference is actually massive, okay? So if I go back to my little calculator here, again, I'm looking at a 30-year mortgage. I go right here to amortization schedule. Now, if I just make, for example, an additional yearly payment, this is why I love this calculator so much, it's so cool. I could actually say I'm gonna pay an extra $1,500 every single year, right? And let's say every January. Now that basically means that, hey, I'm gonna go from paying $278 in interest to paying around $216. That saves me a lot of money. And instead of being done, for example, by, I think it was Instead of being done by the year 2053, I get to be done, for example, by the year 2048. That basically means I'm saving around 5 years of my time that I don't have to worry about this mortgage either. So just one small payment can make a big difference when you're looking at something that's so expensive and so massive. Now, here's a fun trick that I actually like to use to break things down, because sometimes you might say, Tommy, I'm barely making all these mortgage payments normally. Like, how can I afford to pay an extra one? The answer is simple, okay? If your mortgage payment is around $1,500 and you want to make an extra one every single year, the answer is just divide it by 52, okay? And that equals around almost $30, okay? That basically means that if you save around $30 every single, I don't know how to do this stuff. If you save around like $30, there you go, $30 every single week, at the end of the year, you'll have that $1,500 to put towards the mortgage, and that's gonna save you 5 years. Just one extra payment a year is gonna save you 5 years worth of your time and a bunch of money in interest. That's one way to do it. Now, the third way to actually save even more money is to self-tax yourself, okay? What does that mean, Tommy? How do I tax myself? The answer is, most likely, if you work a normal job, when you get your paycheck, you see a few deductions there. You see the income taxes, you see Uncle Sam's Social Security, all this stuff, right? So overall, what happens if you actually tax yourself 10 to 20% and you actually use that extra money to actually send it over to your mortgage every single time you get paid, all right? Or some mortgage companies or some banks, they don't accept, for example, weekly payments. So if you say, hey, I'm just gonna pay extra every single month, that's more than fine too. And make sure that extra money you actually pay in is going towards capital, okay? So you tell them, hey, I want this money to go towards my capital, all right? That's very important. So if I say, hey, I make $4,000 a month, I'm gonna self-tax myself 10%, which is around like $400 every single month, and I send that money over to the bank, right? How much money is it gonna save me? The answer is, let's go over here, all right? So instead of actually making this amount, we're gonna actually send over every month an extra $400. That's gonna go from 278 to 150. That saves me literally a lot of money. Like I think over like 130K if I'm not mistaken. So that's a lot of money, right? On top of that, you go from being able to pay off this home by 2053 to paying it off by 2041. It is massive. It's like over 9 years, I think it is, okay? So that's the idea. So just by doing those little things, that can save you a ton of money. Now, if you don't have extra cash, figure out what bills you can cut around your house and use that extra bill money to send over to your mortgage. Or if you don't have that either, just figure out how you can work extra hours after work and then use that money to send over. But for the most part, the biggest thing you can do is basically buy a home you can afford to buy, take extra money from your paycheck, send it over, or make extra mortgage payments, or for example, get a 15-year mortgage instead of a 30-year mortgage, and those factors are going to save you the most money. Now, overall, when I'm looking to buy a home, guys, again, I'm looking to buy a home that's no more than a third of my monthly income. That includes the mortgage, the PMI if it has any, anything associated with the home except for like utilities. I'm gonna put it in there, okay? HOA fee, all that stuff. I'm gonna put it into that. And if it's no more than a third, I'm in the clear. And then basically I can pay that home off as fast as I possibly can on a 15-year mortgage. That is the idea. And those are 3 ways to save a lot of money when it comes to your mortgage. Comment down below how, so I know you made it all the way to the end of the video. Thanks for watching, guys. As always, like, subscribe, hit the bell so you're notified. Any questions, comment down below. I'll answer them. Up here is another video. Over here is my face. And as always, long-term team officially out. Peace.